Yo, what's up, everybody? It's Friday. Friday, June 14th. I'm coming to you from New York City. Check it out. Folks, this market is making mincemeat out of the shorts. If you're a short seller, it's making mincemeat out of you, chopping you up. I've told this story many times about my days as a floor trader when, for some reason, and I don't know why, but it would be a good psychological study, like a thesis, like if you were going for your PhD. Well, you can't really do it anymore. Maybe you can, like off the floor traders, I don't know. But when I was a floor trader, and this was not just unique to me personally, just about everybody in those trading pits, we always used to love to go short. Now, I don't think we ever made any money. Like, we made money every once in a while. Like the market, it was kind of like, it's funny, it's kind of like playing the slot machines at Vegas. Like, every once in a while, the machine's gonna let you win. That keeps you there, okay? And that just sucks your money up over time. And it was the same thing with the market. Like, we were always selling, no matter what. I don't know what it was. It was some freaking psychological thing that we were always trying to go short. And I say we, and I mean it. It wasn't just me. Like, I remember very, very vividly my days in those pits, and all of us independent traders, with the exception of a few. And those few who were on the buy side, they made money. Okay? They made money. Now, let me, I'm mostly talking about financial futures. Like, I traded S&Ps in Chicago. In the actual physical commodity futures, like I traded oil on the NYMEX, I traded gold. You actually could go short and make some money, but even that was hard sometimes. But it's wild, man. It's like, I don't know what it is. I think people, there's kind of like a built-in pessimism to most people. And I read something once that, and this was a psychological study, I don't know how true it is, but it sounds true to me, that something like 70 or 80% of people's thoughts are negative throughout the day. And like, when you see news headlines, and when you see commentary, and when you see, and all the most popular news sites and blogs, they always have a negative slant. Anyway, I went off on a tangent there. But so the market is brutalizing the shorts right now. It just keeps going up, and mainly it's like three stocks. It's like Nvidia, it's Apple, and it's Microsoft, and they just keep going up. And I mean, I spoke about this yesterday, how when I was teaching a course in behavioral economics, and I used to send my a student out into the hallway to write down on two different pieces of paper actual coin flips, and then he would make up actual coin flips, like 25 flips, and I was able to pick it out every single time, because the actual coin flips had many, like, of the same result. Heads, 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 heads. The ones he made up would be like heads, heads, tails, heads, tails, tails. You could see it was, I mean, people think, like, just because something, it goes in a series, that it can't possibly continue, but it can. It can. Now, it's a little different with the market, because every day is not a separate event. It is in a way, but there's underlying factors. And those underlying factors, well, the primary underlying factor is what I always talk about. It's these fiscal flows, and in particular, it's the leading flows. I'll tell you something interesting, that yesterday we had another net drain of 7 billion. So we're coming into Monday, June 17th, another tax drain. That's the corporate quarterly tax drain. We still have not recovered the April 15 tax drain. Now, I've been doing this a long time. I have never seen a time when we have not fully recovered the April tax strain and then some by the June tax strain. This is a first. And somebody asked me a question today, actually it's a very good question. He said, Mike, does it really matter if we haven't recovered the tax strain from April, because these leading flows are very, very strong? That was a really, really good question, a very insightful question. And my answer was yes, it doesn't matter, or it doesn't really matter, because the leading flows are very strong. But over time, if net transfers, government net transfers, aka the deficit, if that continues to shrink, then it becomes a problem. Right now it's down 183 billion. By the way, it's stabilized. That year-over-year decline in the deficit stabilized now. Actually came down a little bit, because a week ago it was like 2 weeks ago it was like 199 billion, almost 200 billion. Now it's 183. You know, it's still a significant number, but it's nowhere near what we saw in 2022 when it went down by 1.7 trillion. And if you remember, in 2022, we had 2 quarters of negative growth because of that shrinkage. So the 183 billion decline, it's not enough to put the economy in recession, but it has slowed economic growth down. We see that, all right? 1.6% in the first quarter. We don't know the second quarter. I was saying 1.6% and 1.5%. I didn't check Atlanta Fed today. They boosted it up last week to 3.1%. We'll see. So anyway, these leading flows are still very, very strong. We got a tax strain next week, which I'm saying right now is going to be a correction in the market, but not a big one. You have a lot of excitement in these artificial intelligence names. You know, again, I named 3 of them: the Microsoft and Nvidia, of course, and Apple. All right, but there's stuff out there you can buy if you don't want to check, and you should not. I should say not if you. By the way, it's starting to rain right now here in New York City, but I think it's cool. I'm just going to sit out here. It's a little drizzle. I never did I never did a video outside in a drizzle. So there's always, let this be a first. Actually, it would be cool if it was like freaking downpour, right? And I'm sitting here like freaking soaked. I don't know if it'd be good for my phone, but that would be cool. I should do it in any kind of weather. Snowstorm, right? Freaking hurricane, doing it. Maybe, you never know. Hey, tornado in the background, earthquake, ah! Anyway, so it's bullish, man. I mean, these leading flows, still very bullish. Gold, silver, I saw in the most recent CFTC commitments of traders report. Actually, producers were really small net sellers last week. That we're talking about in the week ending June 11th. Okay, they were selling. Oil, net buyers, still buying. Very good. And we're up around 77, 78, 79. They were buying. Silver, they were small net buyers. Okay, so we see a dip. If we see a dip in silver, by the way, anything under 29, man, that's a deal. That's a steal. Okay, I'm telling this right now. And gold, anywhere, well, there were net sellers, but I'm thinking you can use last week's lows or this recent week's lows as a buying level. With these leading flows very strong, I mean, gold, silver, it's still bullish. So, yeah, that's it. I mean, it's all about those flows. There's something else I think I wanted to mention, and I forgot what it is. Anyway, I guess it's going to end up being a short video. It's Friday. Actually, I wish it was raining a little bit more. It would be cool. It would be cool for me sitting here in the rain, getting drenched and doing this. I mean, who does that? Nobody's going to do that. You could only get stuff here on this channel that you can't get anywhere else. Like, I literally want to sit here in the rain and do, a market update and an economics update. Even more rare than a market update in the freaking rain when I'm being drenched. I think that would be so cool. It's New York. I tell you something. I've been out in California for like a year. They come back here in the humidity. And next week I'm going to Florida, which is going to be actually, they've been drenched. Now there's a place, huh? Because they've been suffering from record amounts of rain, tropical rainstorms like flooding. I'll do a freaking video outside. I have a little case for this iPhone where it's impervious to water. I could use that, man. I'll do that. And I'll just be getting soaked and I'll be talking to you guys. I think that's going to get a lot of views. What do you think? Maybe that should be my thing. I should go in like crazy climate environments and do economic update videos. You talk about a niche kind of YouTube coverage. Well, that would be it. Anyway, I guess it's Friday. I'm getting silly. I'm getting goofy. Folks, please like and subscribe if you choose to. It really helps the channel. I see a lot of you have been doing that. I really, really appreciate it. I should have been asking you guys before. You're all good people, and I ask you to do that, and you're nice people, and you do it. And don't forget to go to my website and sign up for a 30-day free trial of MMT Trader. I sent out a bunch of stuff today. I sent out stock recommendations, stuff like that. Oh, I know what I wanted to talk about. Maybe I'll get into this a little bit. So apparently this petrodollar pact between the United States and Saudi Arabia. Supposedly there was an agreement that goes all the way back to the Nixon days, where the United States promised, if I get this right, I don't know, the United States promised to defend Saudi Arabia if they transact all their oil commerce in dollars, okay? And we have heard for years and years a lot of people saying like, oh, this is the only reason why the dollar is strong. This is the only reason why the U.S. economy is strong. It gives us some kind of advantage, blah, blah, blah. And now, supposedly, and I don't know how true this is, but it's been reported kind of all over, that Saudi Arabia has declined to renew this pact, this petrodollar pact, if there ever was one. Again, people have been asking me about this. Mike, what do you think is going to happen to the dollar? What do you think is going to happen to the dollar? And I sat there thinking about it. First of all, a couple of points. Number one, the U.S. is still the largest petroleum exporter in the world. Maybe many of you didn't know that, but that's true. Number two, dollar holdings by foreigners has reached an all-time record high. It just continues to climb because the dollar is the most liquid currency that there is. Number three, Saudi Arabia has been accepting payments for its oil exports in other currencies for a fairly long period of time, although that has been a small piece of their overall, transaction basis. So it's been happening. It's not like it hasn't happened. All right? And finally, if you look at the big exporters to the United States, China, Japan, Europe, Canada, Mexico, South Korea, they rely heavily on exports to the United States, and I'm talking about general exports, to the United States as an important criteria of support for their economies, okay? And as a result of those exports to the United States, China, we're talking about electronics, we're talking about textiles, we're talking about all kinds of things, manufactured goods. As a result of those exports, they necessarily accumulate dollars. So they have the dollars anyway. It seems to me that if they don't want to hold them for any geopolitical reason, they have them as a result of exports to the United States, which is, I think, is going to continue because that is a major support for their economies. They're going to use those dollars to continue to buy oil from Saudi Arabia with those dollars. But here's the other thing that I want to say, which is very, very interesting, okay? And I thought about this today. This petrodollar pact, if that's even what it is, let's assume that's real, okay? That actually has kept the dollar lower than what it would have been without that pact, okay? People think that's a reason the dollar is strong. I think it's actually has kept the dollar weaker over the last 50 years or whatever than it would have been. And I'll tell you why. Because countries needed to obtain dollars to transact, to purchase oil from Saudi Arabia, they had to run surpluses with the United States, trade surpluses with the United States, which means automatically the United States had like permanent trade deficits, because those countries that needed to get dollars, they would do whatever is necessary to acquire dollars, to export. That means keeping wages down, that maybe means currency manipulation, stuff like that. Which meant that the United States ran permanent trade and current account deficits over the last like 50 years, all right? If now they don't need to accumulate dollars like that to buy oil, what's going to happen? U.S. current account and trade deficits are going to shrink dramatically. And that's going to be bullish for the dollar. And let me just add this at the final point. There's nothing I would like to see more. Nothing I would like to see more than all of these, petrodollar doomsday freaks out there who are saying that's the end of the dollar. There's nothing I'd like to see more than the dollar now just shoot up nonstop, because it would be another one of these ridiculous, stupid myths that have been busted about the petrodollar. And believe me, I do believe that is going to happen. Mark my words. We'll come back to this video maybe in a couple of years. And you're going to remember, if you're still with me, that I was the one saying this. And I think my logic is completely rational and it's completely good. But it would be comical, it would be hilarious, it would be fantastic to see all of these people who've been whining and screaming and warning everybody, like Cassandra, Chicken Little, the sky is falling, petrodollar, petrodollar, petrodollar. Wait till it ends one day, and then it ends and the dollar goes straight up. And you know what they're going to say? They're going to say, it's still going to happen one day, because that's what they always say. Anyway, that's it for today, folks. Don't forget, please like and subscribe. Go to my website, pitbulleconomics.com, and I'll see you. Oh yeah, for all you dads out there, Sunday's Father's Day. I want to wish everybody a happy Father's Day. All right, see you.